Hello, everyone, and welcome to today's discussion on the markets. The agenda for today is Brexit and how do we trade the pound into the EU referendum decision. Now, Brexit, the risk is huge. If we see UK leave the Eurozone, that will probably trigger another market slide, maybe. So, I read a report in the morning from This Is Money. It actually captures the whole essence in a few paragraphs, and I would just like to read a bit of it. It states that for businesses, any sterling fluctuations could have a very significant impact on exports, investments, and growth. And for the consumers, for the UK consumers, the strength of the pound in the aftermath of a EU referendum could have an impact on the cost of holidays abroad and the cost of goods in the UK. So we'll see less Britishers in Goa, maybe. If the strength of the pound nosedives after the 23rd June decision and continues to do so, the Britons could actually find themselves facing a very high fuel and food costs. Now, predictions regarding Brexit have been wavering. We saw a lot of polls. First, they were biased on the Remain side, and then later on, we actually saw a pickup on the Leave side. Just like the 20 minutes before, we saw the around 70% of Swiss feel that the Brexit should be a go-ahead sign. Now we know that the from the political side, Brexit won't be so much favored. Even after the polls, we still have that decision to be, which would be taken to the parliament, and the parliament actually has to pass it. From recently on the TIP TV finance show, we saw a lot of analysts come over, and they actually told that most of them are not favoring a Brexit. They don't see a Brexit ahead because at the end the decision is not binding as such. So let's look at, so if you're a trader, if you're an investor, and if you want to position yourself for the referendum, and we'll look at how to trade the pound and how to trade the pound rupee too with Omkar Kodbole, who's a technical and a fundamental analyst. Hi Omkar.
Hi Kaushal, how are you?
I'm fine. Long day today. How are you?
Yeah, I'm fine. Let's get on with the discussion.
Yeah, sure.
Yeah. Uh, so yes, the topic is Brexit and trading the pound, and I've got a couple of slides before we go to the charts.
All right.
Uh, I feel these are the ground rules that one should follow heading into a referendum-like thing.
All
So
right.
the first thing that I would like to state is, the traders should just follow the charts,
I
and
actually agree with this because yes, we saw the markets are respecting the technical levels very faithfully.
right, and we should just forget data for now. Whether it is services PMI data or trade data or anything else that any other release that we have in the UK is not going to have any material impact on exchange rate. If we go back a week, there was a services PMI release.
Yeah,
Yeah, and it's a very important data, and usually better than expected number would usually lead to sterling rally.
that's
But
right.
we didn't see anything happen last week. That simply because no one wants to bet right now.
Right.
There's too much uncertainty. So
Yeah.
just forget the data. Just follow the charts. Second is be flexible and change sides. What I mean by this is the volatility is likely to be very extreme,
Yeah.
and in such situations, it might happen that in the morning your charts would tell you sell, and you
Okay.
enter a sell trade, and by afternoon or by US Open, the things would start looking bullish.
That's right.
My advice would be to be very very flexible. It's
Okay.
okay that in the morning you had a short view, but if charts have turned, the best way to deal with it is turn your trade,
Okay.
go from short to long, and the opposite can happen as well.
All right.
And then, as I said, respect your stop. There's no point in holding a loss making position.
That's right.
As I always like to state is that you can always re-enter.
Exactly.
Many people just keep on holding loss making positions. The best way to deal with that is you can just always book out, and you can always re-enter. And once you book out, you start seeing things as they are,
Yes.
and then you can always enter on the opposite side as well.
That's right. So basically, what you mean to say is that keep following the chart, because even if you have an exit poll, we have
Right,
on the news wire which is opposite, maybe that is
right,
favoring the Remain vote, maybe that is favoring the exit vote. The charts the charts are actually telling you what they are already pricing in everything that is happening in the market. So keep an eye on the
Absolutely.
charts, keep an eye on the technical levels. If you
Right.
and if you're going to carry on your positions, or maybe you're going to do a long trade, just be careful, respect your stops, be flexible.
Right. And going forward, also keep an eye on overall market sentiment. What does that mean? It's very simple. Due to this Fed rate hike thing going on, and there are constant, bouts of dollar strength and dollar weakness.
That's right.
You have periods of, let's say, 10 to 15-day period where dollar keeps on getting sold,
Yeah.
and then you have some Fed official come out and say, there might be a rate hike, and then you have a bout of a dollar strength.
Yeah.
So heading into referendum, if you see, by any means, if you see dollar rallying across the board, instead of shorting sterling, or instead of shorting any other currency against US dollar, a
Okay.
perfect opportunity is to short sterling against any other major. As of now, New Zealand dollar appears very attractive simply because the Royal Bank of New Zealand refused to cut rates today.
Okay.
So Kiwi is on the rise. Yen obviously is on the rise, and EUR as well. So if you see a broad-based dollar rally, you can just short sterling against NZD, short sterling against yen, short
Okay.
sterling against euro,
All right.
and the same thing applies if somehow Fed decides to hike rates on June 21st.
Okay.
It's a very, very low probability. In fact, there's no probability. It's a negligible probability of sorts. But
I have actually stopped reacting on any Fed rate hike news. I see that.
yeah, yeah. So if there is a broad-based dollar rally, this is what you can do.
Okay, so we have Fed members speak tomorrow.
Right.
So I guess we'll have a very good opportunity on shorting sterling.
Exactly. And unwind positions a day ahead of Brexit. These are kind of events one should not speculate. One
Okay,
should stay on the sidelines.
that's right.
uh, because it is always tempting. We always feel optimistic that, okay, if I enter ahead of the event, and if event comes out in my favor, I'll make a killing.
Yeah, but that
But
is like that goes against the most basic rule of trading. Do not try to be the whale.
right,
Just follow the way.
exactly.
You could keep in mind the 15-minute candle decision.
And once the results are out, you are going to get a big move, especially if exit vote wins.
Okay,
You can easily enter into short sterling trade. You can short it against dollar, against any other major currency.
okay,
And the other important point is, jot down Brexit day high low. Once, let's say, if Brexit results are out today,
yeah,
and the market gets one full 24-hour day to react.
yeah,
So what I would do is I would jot down tomorrow's high low,
okay,
and on the next day, if I see sterling trading below the post Brexit day low, I would short,
yeah.
and vice versa.
We saw a lot of people tell that on a
Right,
Brexit we'll see the pound depreciate by 20%.
right, right. So, and on the higher side, I mean to say, if Remain vote wins,
Yeah,
there's also a possibility of a rally, but I guess their rally would not be very intense.
that will be short-lived.
Yeah, that would be short-lived, and it could be slow as well,
That's right.
compared to what we will see if exit voter wins.
That's right. So the larger risk is to the downside than the upside.
Right, absolutely.
Yeah, but I see a lot of if you see the positioning, we saw the polls come on and off, and the
Right.
Brexit just keep going higher. It keeps coming lower. I see. I guess the markets are actually pricing in a little bit chance of Brexit.
Right. Today, actually, the 10-year gilt yield, 10-year government bond yield in the UK dropped to record lows.
Yeah,
So now there are a number of interpretations. Like yesterday, we had on Tip TV, one guest said that if Brexit was such a large threat,
Yeah.
and if pound was to suffer a run, that is, pound was to suffer a big sell-off,
Yeah.
the 10-year gilt yield would have spiked.
Yeah, that's right.
But on the other hand, you can also interpret it as markets are running for safety,
Yeah,
and that's why they are pouring money into gilts, and that's why the gilt yield has dropped to record lows.
that's right. So,
So my personal opinion is that this drop in the yields to record lows is a representation of the fact that people are running for cover.
all right. Yeah, we saw a lot of, we saw the liquidity become thin, and it is
Right,
actually becoming thin as we're going into this decision. We
right,
also saw the FTSE. The FTSE is still resilient somehow.
right,
And I guess there's a problem of volume.
right,
And we're looking at the guilds today. We can actually infer that people are taking out of money from risk investments and pouring it into the guilds.
right. Absolutely. There's another trade that you can do as well. You can buy gold in terms of British pound.
Okay.
So that could become an attractive trade as well.
All right. So on a Brexit,
Yeah,
okay, the short pound dollar and
buy gold.
were in pound terms.
Yeah. So basically, what I would do is I would buy ZAU slash USD, that is
Yeah.
gold in terms of dollars, and then I would short British pound against US dollar. So effectively, what I'm doing is I'm buying gold in terms of British pound.
Okay. Okay, that's a good one. So, looking at this, if we have a Brexit, the pound dollar falls, and coming back to our home, what would be the impact? Because I've seen a lot of people asking that. Just yesterday, someone asked this on a YouTube comment. What do you think will happen to the Indian markets on a Brexit?
There would be a big shake off, and that would be temporary. There would be a big fall in like Nifty, maybe. Yeah, but that would be very very short lived. Simply because it doesn't matter to Indian economy if Britain stays in EU or exits EU.
Okay,
There's no such direct impact other than financial market instability. And whatever dip we see in Nifty or Sensex, it would be a buying opportunity in my opinion.
all right,
And obviously, GBP INR would suffer a huge drop. We
okay,
can take a look at the chart.
all right.
We have
So,
this.
before we continue, Omkar is trying to force me to start investing, and he
Yeah.
wants me to stop day trading and stop losing. So, I'll actually wait for the referendum decision before this.
Yes, absolutely. You can wait for the referendum.
Okay, that sounds cool. So
Yeah.
let's look at the charts for the pound and the rupee.
Yeah, this is a pound and rupee monthly chart, and we can see it's a well-established rising trend line,
Yeah,
drawn from 2010 low and 2011 lows. And off late, as we can see, it has the bullish move topped out at 107, and since then it's been a sort of sideways move, let's
that's
say. And this trend line would be put to test and could be breached if Britain's vote in favor of Brexit.
all right. So the next target would be
So the
probably
next target would come around
the stop.
April 2015 low of 90.85.
Oh, that's bad.
Yeah, and the another target would be 87.09. That comes to 2008 January 2008 high.
That would be more bad.
No, no, no. Sorry, it's not January 2008. It's July 2008 high.
Okay,
But again, even the Brexit-driven drop in sterling could prove out to be short-lived.
okay,
So again, because most of the experts are saying that over the long run, it doesn't matter if United Kingdom stays inside EU or exits EU.
all right.
So,
So if
s-
UK was if UK had adopted the euro, maybe
right.
we could have seen a very bad
Oh,
impact.
then that would have been a big trouble for UK economy as such.
Yeah, but currently, okay, the pound will go lower if
Right.
it happens. But okay, let's take a very different case. Brexit is not going to happen. Even you know that. Like, there is a
Okay.
very slim chance that Brexit is going to happen. Let's
Uh,
assume the votes come out entirely in favor of a remain vote. I'm not saying that it
right.
would be close.
Right.
I'm saying that it would be at least 60 to 70% favoring to stay in the EU.
I feel in that case pound would rally, and it would be uh, against INR it could easily go above 100
All right.
in that case, uh, because on charts somehow I feel on technical chart of GBP USD,
Yeah.
somehow I feel that markets believe it's not going to happen.
All right.
We have a well-established falling trend line. Uh, this. Let me. The red trend line that I've drawn from a high of July 2014 and June 2015.
Okay.
So we have made multiple attempts. First attempt was in August 2015, then September 2015. Entire October and November was spent trying to take out this falling trend line.
That's right.
Another attempt was made in December, and now we are attempting again. You know, and mind you, this is happening just before a Brexit
That's
referendum. And if you look on the daily charts, we have a nice rising bottom formation.
yeah.
So somehow I feel we are going to go higher from here, maybe to 1.50 levels.
All right.
Going purely by technical charts, as I just mentioned on slides, that it makes sense to follow charts right now.
All right.
So I'm ignoring the fact that there is a referendum, etc., for a moment,
All right.
and going purely by charts, I get a view that we are likely to see an upside break from this trend line. For me, entering long, I would enter long only if I see a weekly closing above the red trend line.
Okay.
This is simply because if you again switch back to a weekly chart, you can see a number of attempts.
That's right.
This can be called as weekly highs above the trend line.
Yeah.
But if you see clearly, the weekly closes have been below the trend line.
Okay.
So there is no sense in entering a long trade just because the daily candle has breached the trend line. You need to see a weekly candle.
Okay. That's right. We need to see a close before we.
Right. And if we see a weekly candle above this trend line, I guess we are heading to 1.4850, 1.50 levels. Now, someone might also draw a falling trend line uh, from July 2014 high to August 2015 high.
All
So
right.
the resistance comes around 1.4860.
Okay.
But I would give more importance to the red trend line simply because it has acted as a strong resistance for so many days now.
Even if you see a close above this, we are probably going to see a weekly candle which will all or which will close above the black trend line too.
Right.
So
Exactly. Exactly. So, going purely by charts, 1.45 appears, 1.50 appears likely. Let's assume that this is a rising channel now. What I've done is I've plotted a rising channel.
all right.
So we have a well-established rising trend line, and any rebound from here, as we can see, followed by a break of the falling trend line, a red one, and we go here to 1.50 levels, which is also
Psychological level, and if we break above that again.
right. And if you check the date, it comes around 25, you know, 25 June 2016, which is
Okay.
just after referendum.
All right.
So
So we'll
yeah,
see a lot of action.
yeah, we will see a lot of action. And there's another chart, I would like to show is a GBP NZD chart.
Yeah.
It's We had a nice falling channel
All right.
till late April 2016, which was breached on the higher side.
Yeah.
But now we are making re-entry inside the falling channel. If we see a daily closing below 2.024 levels today,
Okay.
I guess we'll go back to around 1.94 levels.
Okay.
Note that the RSI is,
Oversold.
hitting the oversold territory.
Okay.
So we might see a sideways action as well. But if a daily closes back inside the falling channel, I guess the bears would be reinforced.
All right.
Then we also have a Euro GBP pair to watch
Okay.
out for. Uh, this FXCM software does not have an option of building a cipher, but you can go to TradingView and plot a cipher, and you get a target of 0.8,
Okay.
and that is a potential reversal zone, which means you can short at 0.8.
But
So ahead of referendum, maybe ahead of referendum, we may see another selling emerge in pound, and the pair could go to zero point 0.8, where
okay,
you can enter fresh shots.
all right. So pound, New Zealand dollar, pound, euro pound.
Yeah,
These are actually good trades
you're right.
heading into Brexit. All right. So looking at the gilts, Omkar, and looking at the currency market performance,
Hmm.
now we can say that the markets are not expecting a Brexit, but only to be on the safer side, they are investing in gilts right now.
Right, exactly.
We can also make this argument that the markets are not expecting, sorry, the markets are in favor of remain vote.
Right,
Only to be on the safer side, they are parking in red. If they were, if there was a even a slight deviance that there was someone who was actually expecting the Brexit to happen, we could have seen the pound already fall off.
right, exactly. And I guess markets are more frustrated with the volatility triggered by Brexit polls rather than the outcome. They are more afraid of the volatility that polls trigger, and
Right.
that's why people just prefer to sit on the sidelines now.
All right. Okay. So sounds
Yeah,
perfect.
yeah,
So summarizing it very quickly, if you are going to trade the Brexit, keep an eye on the pound dollar or keep an eye on euro pound and also on the pound in ZD. But if you really want to trade this, Omkar gave us a very good option of trading it in gold, buying gold.
yes,
But we also saw. But if you're still going to trade it, keep an eye on charts daily. Maintain tight stops, and if you're long and if you're short, just go with the market. Don't try to when it comes to trading psychology. If you are expecting something and it is not going in your way, drop out of it. Go with the trend.
perfect.
So, thank you so much, guys, for listening. Thank you so much, Omkar.
Thanks, Kaushal. Bye.